All right, happy Friday, everybody. It is August 5th, 2022. Let's go ahead and jump right into things here. Do a quick review of yesterday. Yesterday was very balanced. As you can see, if you just zoom back and look at all of yesterday, just up and down chop. So I'm going to quickly just run through some interesting things that happened, and then we can get into this morning. So right out of the open, market tried to break through the OPL multiple times. In fact, there was a minute or two here where they just could not break through the OPL. Failed from there and came back up, retested OPL, and came right into our first level of expected support here. Remember, we said if the market breaks through the overnight lows, we've got this level here at 41.47 That would be the first expected area of support. And what did they do? They broke it by less than 2 points. I think it was just under, maybe a tick below 2 points there, and then popped up for a 15, 16 point bounce. So beautiful push. You can see I took a trade off the back end of the OPL as it broke through the VWAP and the OPL and pulled back. I thought we might get a breakout up to 66. And these were our first two expected resistance levels, interestingly enough. Came right into the first one and failed. Came right into the second one to the tick and failed from there. And then the markets, retested that high, came back down to retest this little area here and eventually broke through. And then where did the market bounce? Didn't bounce at 42, the next expected area of support. It bounced at the following level down here, 41.3775. And again, just like earlier, off our first expected level of support, it did break by 1.5 points, 1.75 points, pretty much almost exactly like that, and bounced right back up for the next rotation in the market. So again, even though it's been sideways and choppy when you zoom out and look at everything, it's still respecting these levels all the time. Got a nice pullback right to the power level and got a bounce right back to test VWAP. You can see all these problems trying to get through VWAP all throughout the morning. And then again, it was choppy, so what they have to do, they had to take a little bit above, a little bit below. Lots of trouble off the OPL, as you can see, all morning. And then we pulled back, held that was our first expected support level of the morning. Held it multiple times, in fact, 3 tests. It did bounce 2 ticks in front of it, and then came up. And the sexiest thing that happened here is that in the overnight session, we came right to our next minor level at 66.25, hit it to the tick, and then we failed. And it came back and basically bounced off that same swing high level we were watching at 47.25 in the overnight session for another attempt to bounce back up. But as you can see here, this is right where my cursor is, and this big drop was the news this morning, the non-farm payroll and all that stuff. And you can see, obviously, not a very positive reaction so far. They went ahead, they chugged right through one of the smaller retracement levels we watch, although it did come down, get a little reaction, and then come right to 42, our major level, and fail. But it was just a little micro movement. So it was like right off the retracement level, right off 42, and then it continued to fall from there. It did try to hold here at our next minor level, 41.23, and bounced once, twice, 3 times, and then it started to get a little wacky there and fell even further. And now you can see on the trek lower, the market came right into 07.5 and bounced off to it with maybe 1 or 2 ticks of heat, and it's now at this next area. This is a structure zone here, right? So it's coming down and having trouble around this area. Eventually it's going to probably break through and come right back down to 94. Right, so this is where we find ourselves this morning on this pullback. So let's go ahead and jump up to the higher time frames here and take a look at what we want to be working with this morning. So first things first, I'd like to take a look at my signals on the higher time frames. Usually when we get our daily and our 4-hour signals, that's where we see the biggest moves happen. And remember that we've been talking about the bearish divergence on the daily. So as we push to come up and test the high of June or the high of the last day of May here, we still keep getting these bearish divergences, and they do get a little bit of a follow through. So if you see every time we see a bearish divergence on the daily, even if it's a small move, it's still got a pullback there. So we pulled back back from the August 1st high from 45 down to about 40.82. Then they popped back up and we got another bearish divergence yesterday. So this move down from the non-farm payroll and whatever else came out there at 5:30 is not surprising given that we have the daily bearish signal. And then again, down on the 4-hour, this is what we talked about yesterday going into the pre-market. We've got a nice 4-hour bearish signal up here, and you can see that arrow pointing downward. That was our expectation given the 4-hour and the daily signal. So we did pull back yesterday. It just was very sideways. The actual pullback we're now getting here off of the news. So I see this time and time again, guys. If you even remember all the way back to just before the COVID sell-off back in 2020, we had an alignment. In fact, we didn't have a trade room at that point. But back at the beginning of 2020, the charts told you there was going to be a major pullback. And then, COVID correction happened and we sold off almost back to lows we haven't seen in years. So this, again, I just want to point out, the bearish divergence was on the daily, the 4-hour, and the hourly charts back yesterday. And now here we find ourselves in a pretty appreciable pullback. It's usually the moves are in the cards just based off the technicals before they actually happen. And I'm telling you that I see this happen over and over again. So 4-hour bearish signal from yesterday's high, daily bearish signal from yesterday's high, hourly bearish signal from yesterday's high. The expectation this morning is for the pullback again. How far are the bears going to take it? We have been in a fairly two-sided market all week long until we get one directional move. And we see this happen. There's been a lot of nice bullish directional moves throughout the last month or two, but there's been a lot of sideways action, two-sided action as well. So how far is this going to make it here? No, again, nobody knows. All we can do is look at all the levels that could potentially act as support as the market pulls back, or if it continues to pull back from where we are right now. So let's look at that for this morning. Like I said, everything was lining up here yesterday and going into this morning for a pullback. The main thing that we want to be aware of is the bullish signal that told us we could expect some type of push on the morning of August 3rd, which was our bias going into the open with that multiple time frame bullish signal down here off of 40.81. That level should sound pretty familiar since we've been talking about it all week. If we can't get through there, that should be a clue they're probably going to try to bounce it right back up and test the highs. But once 40.81 breaks here, guys, that's our clue. We want to be targeting down to 40.74, and all the levels on the chart are the same levels we've had for a few days now. So I'm not going to list out everything, but I do want to show you what I would expect to happen here if the market does end up coming down to get through 94, coming down to get through 81, and breaks through there. I'm going to be targeting down to this swing high at 57. Okay, so we've got 40.57 down there. This is the major retracement level at 73.5. So each level, as you guys know, if you've been here for even just a few days, each of these levels is a potential area where they could hold. But if it doesn't hold off that major retracement there at 74, I'm looking for a short down to 58. So a good 10, 12, whatever point, pull back from there. And then really this 42 to 44 area is what I'd like to see. Remember yesterday I told you, even though we have a couple levels down here, the main one that sticks out the most is 40.42 to 40.44. So if we get through 81, that might be a good larger target. It's going to be another 30, 40 points, 25 points lower, depending on where you enter here, if the market does start to break lower. Any further from there, and it's again all the same levels I keep mentioning every day. So we've got the major and minor eye levels. We've got a couple swing highs in here you can see that are still going to be relevant in my opinion on this way down. And then this retracement level here, I know it looks like it's not on the chart because this is the 60-minute, but if we pull back, we could come down into the 61.8 retracement of the whole sell-off down here at 40.12.5, another nice ripe area for potential support here that you see highlighted. Outside of that, it's all major and minor eye levels, giving you the exact areas where we get major reactions in the market. So all those levels down there should be familiar to you. And let's just look out above. So who knows? Remember, anything's possible in the market. You never know what's going to happen next. We could start to get a rally here that starts to come up and rip through all of these levels and break out to the upside. So if the market does end up breaking through the high of yesterday, which really is the high for the last, few months, ever since we've made this recovery all the way back from 36.39, if you guys remember, that level's still stuck in my head there. Then we're going to be coming up, getting through this high, and then each distinct level could potentially be a failure point. Remember what I say, even when you have a level that's very close together, even 84 and 92, we see this happen all the time where we get these really big pushes, comes all the way up, bam, hits 84, get a big pullback, and then all of a sudden it comes all the way back up, breaks through that high, and then fails right off the next level, even though it's just 2, 3, 4, 5 points away. So be aware of that, and be aware of all these levels. Again, up above us here, it's all major and minor eye levels, giving you the major areas of support and resistance. We've got the retracement level I've been mentioning for a few weeks at 42.21.25, and then I believe the 61.8 retracement all the way up here at 43.58, 43.59. Okay, so that's what we're looking at this morning. A lot more signals telling us we should expect a pullback this morning. The question's going to be, how far are the bears going to be able to pull it back? And again, the caveat to that is anything's possible. So if it does start to rip against what our expectations are, we know what we're going to be doing here, right? So just one other thing. I'm going to go down to my 10-minute chart. And I just want to show you here on the 10-minute that this whole area up above us, if we end up, let's see if I can kind of zoom this in. You guys can see it a little bit clearer here. But if the market does pop here, we've got a couple areas of resistance that would make sense. We've got VWAP. If we pop up, we've got the low of yesterday, which is that major swing low back here. We've got the next, and see how this is like a stair step. So it came down, bounced, pulled back right to our level. Actually, no, right here, bounced, pulled back right to the major eye level, pushed, bounced right here, and then kept going. This whole stair step right here, each of those distinct levels could very well be the level that they peak into and fail from. So what do we have? We have the low of yesterday, which is that first peak. We've got this marked on here at 41.39.25 off the next one. And then it just so happens that our major eye level, 42, was the low of that next swing. A little bit further up, you see this shaded region from about 46, 46.5 to 48, that little 1.5 point pocket. That is an area where we just came into and just bounced and bounced. It got messy over here, but then bounced and bounced, and then in the overnight session came back and bounced again. So if we come back up into that zone, another little pocket that makes sense as potential failure point. And then you see this big box that I've drawn around all this price action from about 46 to 65. Let's just call it a 20-point range here from just about 46 to our minor level at 66.25. Very, very messy area of the chart. So this whole area could act as a major resistance. The question again becomes, what distinct level is going to be the level that holds up in here? So it's going to be, in my opinion, a little bit harder to pinpoint the most relevant levels of resistance once we get up into that pocket there. Probably more so basically the low of yesterday, 36, to the high of the overnight session here at 66. So again, there's just a lot of crap up there, a lot of stuff that would make sense. So just be aware, if we get all the way back up in there, it might be hard to pinpoint where we're going to get the turn. So that's it, guys. That should help you orient yourselves coming out into the open. If you're watching out on YouTube, I hope you have a great trading morning, a great weekend, and of course, we will be back on Monday. So see you then.